Hey, this is Chris Goff, and in this training video in DealPro, we're going to talk about acquiring it via seller finance and selling it with a lease option. Now, if you've seen some of the previous training videos on the seller finance, you're going to see these numbers are exactly the same. So after repaired value, this is what it would be worth. The comps on the property, $415. And although it's not in great shape, that's why we're buying it for $285. As we scroll down, the repair cost, $48,000. Hedge expense is nothing more than an added buffer expense I like to put into these deals just in case you miss something in the repairs inspection. So just an added buffer I like to use. Estimated repair period, 2 months. Other costs are going to be your monthly holding cost. If you click on the plus symbol, you can actually put in more accurate numbers. I'm just throwing out an example here in a total, just as much as I'm doing the exact same thing in closing cost. You can actually go through, fill out this to get a more accurate number. Insurance, $1,100, taxes, $4,500, HOA dues, $200. Financing. So we're getting the seller to finance it at $285. I'm going to put down $5,000 at 4% interest. I'm going to amortize that over 30 years to keep that monthly payment down. But I do have a loan balloon term of 5 years, meaning that I'm going to have to make payments for up to 5 years. You could buy the house tomorrow, or you can wait up to 5 years where I would then have to cash the seller out, either selling it or refinancing it and doing something else with it. So we scroll to the top, we're going to sell this on a lease option. So the sales price, especially with a lease option and putting money into the property, I should be able to get full price for this at $415. I'm going to ask for option payment, which is nothing more than a down payment. It is non-refundable and applied to the purchase price when the buyer buys at $12,500. The rental amount is $2,000. Monthly credits are, if I were to give a $100 monthly credit, that would be applied to the purchase price, assuming that they paid me on time. So it's an incentive for the buyer I don't really use a lot of. I know some investors do. Lease option term, 12 months. I don't go longer than 12 months with any buyer on a lease option. If they need more time, extend it. I've got 4 more years with the seller, or find a new buyer that can put down another $12,500. Sell the property, rent the property. You have options if the buyer does not buy. The analysis is below. We get down to the bottom. You can see a total profit, assuming that the buyer did buy it. And of course, our goal is to do that. And that's why I like getting our buyers, especially lease option buyers, with a local mortgage broker to help them through those 12 months to get qualified to cash this out, because obviously it's a big payday for us. $74,000 on this particular deal. And the great thing of running numbers in DealPro is you find out, oh, well, that's not a good number. I don't like that number. And you can start adjusting these numbers to where it makes sense. And then as well as looking at other potential exit strategies and comparing those. I can now print it, save it, and compare it to the other analysis that I may run on the same property. So I hope this training video helped, and look forward to seeing you on the next one.